House prices in the UK at the moment are very, very confusing, and I can easily see the situation where there are many buyers and sellers out there looking at the latest data from places like RightMove, Nationwide and Halifax and wondering what on earth is going on, especially with this month's data, which is a complete flip. It's a complete change in direction to what we've been seeing from the rest of the year. So in this video, we're going to be taking a look at the latest RightMove House Price Index, which has been released today, and trying to make sense of what is going on. So if you're a buyer or a seller out there, you can see through all the smoke and mirrors and try and make your own decision as to which way you think house prices are going, and then make your own decision as to whether you want to buy or sell or be patient at the moment. So just very quickly, the headline figures from RightMove. In December, they are reporting that month on month house prices fell 1.9%, which is an annual change of minus 1.1% from this time last year. And sales agreed are down 13% compared to the same period last year. Now, RightMove have tried to pass this off as a positive, this bit. Sales agreed in the year to date are just 13% behind the same period in 2022. Now, if you remember, the end of 2022 was pretty bad after the mini budget. So if sales agreed are down on this time last year, that's actually quite a bad thing. But if you've been following house prices this year and over the past few months, you look at this thinking, finally RightMove are catching up with what's going on. They're being a bit more realistic with the data as to what is happening in the housing market. But then you compare this to the latest data from Halifax, who are reporting that house prices actually went up last month, and also Nationwide, they're saying house prices went up last month when actually they didn't. That was just their seasonally adjusted figure, but they're saying the house prices went up. So for the past year, we've been seeing both Nationwide and Halifax reporting that house prices have been falling monthly. And then RightMove have been saying that house prices were still going up. And now all of a sudden, Nationwide and Halifax are saying house prices are going up, and RightMove are saying that house prices are going down. So if you're someone that hasn't been following this market closely, you're probably looking at this thinking, what on earth is happening? Are house prices going to fall further from here? Are they going to stay the same? Are they going to go up? So I'm going to try and explain my understanding of this, why we're seeing these differences and why we're seeing these differences now, and where potentially things might go from here. So the first thing to be aware of is that there is a clear distinction between RightMove and Halifax and Nationwide. So RightMove is asking prices only and for new listings only. It doesn't take into account reductions on any of the existing listings on RightMove. And Nationwide and Halifax are for mortgaged purchases only. So it doesn't include cash sales or cash buyers, and it doesn't include asking prices. These are basically the prices that were agreed at the point of mortgage valuation. So that's why there's a difference there. The other thing to keep in mind is that with RightMove don't actually seasonally adjust their figures. So this is why we see quite substantial movements from positive to negative percentages month on month, whereas Halifax and Nationwide both seasonally adjust their figures to try to smooth out the figures. So this is why in December, we're seeing RightMove report quite substantial drops in new listing asking prices versus Nationwide and Halifax, who know that December is traditionally quite a negative month for the housing market. So they apply a positive seasonal adjustment, which brings their reported figure up. And Nationwide is a great example of that. If we go back to the figures, and I talked about this in last week's video, the actual price was actually negative last month. We went from 259,000 to 258,000, but because they apply a seasonal adjustment to these figures, they reported that house prices on their agreed sales went up month on month when they didn't actually. It's just a seasonal adjustment that did that. So that's why we're seeing this quite big discrepancy that RightMove aren't seasonally adjusted, but Halifax and Nationwide are seasonally adjusted. So I'm sure with Halifax, if we took off their seasonal adjustment, it would probably still be negative month on month as well. So hopefully for those buyers and sellers that are out there that are fairly new to this helps you to understand a bit better why these data sets are now conflicting, and also why they are going in the opposite direction. So earlier in the year, we had Halifax and Nationwide, as we can see here. This is the annual change percentage. So pretty much from the end of 2022, Nationwide have been negative for the past 12 months on an annual basis, and that Halifax followed shortly after, very early in the spring. They've also been negative for a number of months. And during that time, we had RightMove was still positive on an annual basis. RightMove only went negative at the very end of summer stroke into the autumn this year, and they've only been negative annually for the past couple of months. So why is it now that Nationwide and Halifax are positive whilst RightMove are negative? It's quite strange. It's quite a flip to what we've been used to seeing, but hopefully now you understand the seasonal adjustment. That is part of the reason. Now, I think there are a few other things to consider as well, but let's dive into the RightMove report, as I want to go through those first before we discuss some of the other things I want to cover in this video. So I've highlighted a few of the key areas. There's not a huge amount to go through in this month's report. So average new seller asking prices dropped by 1.9%, which is just under £7,000 this month, to £355,000. Now, just to give you an example of how unhelpful asking prices for new listings are, if they're at £355,000, the average agreed price from Nationwide is £258,000, and the average agreed price from Halifax is £283,000. So there's a big difference, like over 20% difference between these indexes. Prices usually fall in December due to seasonal factors, but this month's drop is bigger than the previous 20-year average of 1.5% as sellers get more competitive. So we know on a historical basis that this December is slightly worse than what we've seen over the past 2 decades. Now, having said that, prices in 7 out of 11 regions are still higher than a year ago. Remember, this is asking prices for new listings. It doesn't take into account any reductions. So there's still sellers in 7 of the 11 regions thinking that their houses are worth more than they were 12 months ago, which is absolute madness. The Northwest leads the way, up by 1.5% compared to last year, while the Southeast is the worst performer at 3.7% below 2022. And that makes a lot of sense, especially what I'm going to show you in a moment. The average mortgage rates have now fallen for 19 consecutive weeks. That's a really... That's a really way of overblowing this. 19 consecutive weeks that mortgage rates have been falling, with the average 5-year fixed rate mortgage now 5.11% compared to 6.11% in July. That makes it sound really dramatic that things have massively improved. Yet if we look at RightMove's own affordability data, which I've got here, this is their affordability line. Does it look like affordability has improved that much? If we go back to 2018, 2019, 2020, when interest rates were nice and low. Now look at this affordability now. We've jumped from £750 to £1,300 to £1,400 per month. So yeah, things have softened slightly. But dramatising it by saying mortgage rates have been falling for 19 months, really, in the grand scheme of things, isn't making that big a difference to the overall affordability. And if we come down a bit further, this is what I want to come back to with the drop in the Southeast. This is to do with properties that are more expensive. So we can see the biggest hit has been to the top of the ladder, which month on month is down just under 5%. That is a huge reduction in new listing asking prices in a single month. And annually it's down 3.2%. You can see how that compares to the smaller properties. So top of ladder, RightMove class top of ladder as any property that is 4-bedroom detached or above. It doesn't include 4-bedroom semis, it's just 4-bedroom detached or above. So we can see that the bigger properties are really struggling to sell, which makes sense as debt is more expensive at the moment. And this follows on from last week's video. Last week's video, we were trying to understand why house prices that were being reported by people like Nationwide and Halifax maybe weren't falling as fast as what we're seeing when we're actually monitoring our own local markets. And I think potentially what is happening is the people that are downsizing from the top of the ladder, they are selling their expensive properties and they are buying the best of the cheaper properties. If you're selling a £600,000 property and you're looking at properties from £300,000 to £400,000, you're probably going to be buying the more expensive ones, the ones that have done really well, have got additional features that maybe the cheaper properties don't have. So I think we're seeing that money move down the house price tiers, so to speak, from the top tiers to the middle and the lower tiers. And because of that, the average prices aren't falling as much as they actually are, because although these indexes are supposed to be mix adjusted to take into account the different types of properties, the ones that are still within those different tiers, the ones at the higher end of each group is potentially being bought because the top of the ladder, the big money, is downsizing and buying the higher end from each tier. At least that's one theory. We don't know for certain, and I'm just purely speculating that is what is happening. Just a final line here, which I thought was quite amusing. Rightmove's measured just over 71,000 asking prices this month, which is circa 95% of the UK market. It's not 95% of the UK market though, is it? Because we know this is new listings only. And there's 400,000 to 500,000 listings on Rightmove. So really they're reporting a tiny amount of the properties that are for sale. And then finally, we have the final paragraph from this report, which is the average new seller asking prices fell by 1.9%. As we already know, sellers who come to market in December often have a pressing reason to sell and need to find a buyer quickly and therefore price more attractively to capture the attention of festivity distracted buyers. However, this is a slightly bigger December drop in newly marketed property prices than usual, with the December average over the last 20 years being 1.5%. So we already know that. But I think the most important thing to take away from this is one of the reasons potentially why house prices have dropped more with Rightmove this month versus Nationwide and Halifax is these are new asking prices. So there are people that are coming to market, anyone coming to market in November, December, they are serious about selling. People that come to market in the spring and summer, often they are flying the kite. They're just trying to see which way the wind blows and how much money they can get for their property. But people that are serious about selling, the people that aren't serious about selling at the moment are going to go, I'm going to wait till January or February or March, wait for the spring bounce and get lots of money for my property. People that have to sell or people that are serious about selling at the moment are going to be doing their research. They know that Christmas is coming. If they want to get sold now, they know they need to come to market with a realistic price. So I think that's one of the reasons, again, why we're seeing a sharper fall now than what we've seen over the past few months from Rightmove in these latest reports. Now, one of the things that I did find quite interesting is that one of the things they didn't mention in this report was how long it is taking for people to actually sell a property. And if I scroll down, I should be able to find the graph that I'm looking for. So the average time to secure a buyer, this is nationally, in number of days. Look at this, 55, 55, 57, 59, 62, 66. That's like 2 months. Now, if we compare that to this time last year, so I've got the report from December 2022 here. Look at this, 31, 32, 33, 33, 40, 45. That's a huge increase in how long it's taken for people to sell their property. In some cases, that is doubling. It's up at least 50% in most cases and most of the months that we're looking at there. And I think for them to not really point that out, because they can say all they want about house prices, but if people still aren't buying, and that's reflected in the fact that it's taken so long to secure a buyer, doesn't matter if they think that mortgage rates are coming down, affordability isn't yet filtering through into properties being snapped up. So it's an interesting thing that I wanted to show you guys as well, as I don't want to try and push you in one direction or another. You guys know I have a negative bias on the housing market, but hopefully by showing you the data, you can form your own decisions and make the decision that is right for you and your individual circumstances. Now, one of the other reasons why potentially sellers or new sellers may be getting a bit more realistic with their initial asking price is that we're starting to see sold house price data since the peak last summer, starting to filter through onto the various websites that publish it. So potential sellers can easily see now what houses in their local area have been selling for over the past year or so. And if they're seeing real term falls, they are going to be more tempted to try and get sold quicker because they know that house prices are probably heading in the wrong direction. And a good place to look at is a website called houseprices.io. This is a really simple website to use. You can pop in your postcode and look at any street in the UK. So it's really, really helpful. And the reason I wanted to share this website with you, I have no affiliation with these guys, by the way. I just want to share it as I think it's really helpful, is you can see very quickly that things have changed quite substantially in the UK housing market. So this latest data goes up to the end of October, and they color code it 3 different ways. One, if it's green, then it is a nominal and real term, so inflation adjusted increase in price. If it's orange, it means the price has gone up nominally, but it hasn't gone up in real terms. Because remember, when something has a value, so if a house has a value, it's because it's compared to another asset or unit of exchange. So your asset, your house, has a value against the pound. The problem is the pound has gone down in value, which doesn't mean your house has gone up in value. It just means the pound has gone down, so there are more pounds for your house. So this is why it's quite useful. And then the red means it's both down nominally and inflation adjusted. So it's really good to get a snapshot of how things have changed, because if you'd have looked at this, I don't know, maybe a year ago, you'd have been seeing mostly green. Most of the prices were up nominally and inflation adjusted. But if you look at these at the moment, so these two, okay, these are up nominally. Let me just hide the webcam because it will make it easy for you guys to see this section here. As I hover over these properties, you can see the price has gone up, the nominal change and the real change. But when I hover over the orange ones, you can see here, yeah, the price paid has gone up. The actual real change, this was last sold 22 years ago. It's gone up £26,000 nominally, but the real change, because the value of the pound has gone down so much, they've actually lost 33% on that property. And we're seeing swaths of these orange listings appear now that inflation adjusted have actually lost value. And we're also seeing ones that have sold recently. So this was sold in July 2022 and then again in October 2023. And that is a nominal change of down 12% and a real change of down 20%. So there are lots of examples here for you guys to go through, and you can do this, so like I say, pop in your address and look at your local area to get a real feel for what is going on. And if we compare this to maybe, I don't know, let's try and find the end of 2022. Let's go to page 50,000 or something like that and see what we get. So page 50,000, you can see there's only a couple of orange and a couple of reds. Most things are green, and the ones that don't have any color, they're just ones that don't have a history to compare them with. Because see, that is a big difference to what we saw on page 1. You've got a few orange ones here, but most of them are green. They've gone up in nominal terms and in real terms. But when you look at the latest data, everything is orange. Not everything, but most of them are orange, and there's a few reds in there as well. So this data is filtering through to potential sellers. So when they're pricing up their property, they can see that the prices around them maybe aren't as high as they thought they were, now that they can see real prices around them from the past 6 to 12 months since that peak in 2022. Now, just to wrap up this video and to pre-warn you that in January, you're likely to see the complete reverse of this as new sellers start to appear on the market with overly optimistic asking prices. As these prices aren't seasonally adjusted with RightMove, we're probably going to see a positive month in the next month's figures. So don't be scared if that happens. That's what happens pretty much every year. So I've just pulled up the report from January 2022 so you can see the sort of headlines to expect. Early bird sellers benefit from busiest ever start to a new year. And I wouldn't be surprised to see something sensationalist like that at the start of 2023 as well. Now, if you are thinking about buying or selling your property at the moment, there are a number of red flags you need to be aware of on RightMove. So I'm going to pop up a video now that talks you through those red flags, and I'll see you guys over there.